So the government just decided to spit in our eye again. Huffington Post is reporting, quote, "The Federal Reserve on Thursday granted banks an extra year to comply with a key provision of the Volcker Rule." So the Volcker Rule, I always have trouble saying that. I don't know why. For those of you who don't know, is a key provision of the Dodd-Frank financial reform that passed after the subprime mortgage crisis and during the Great Recession. And it's a reform that bans banks from doing what's called proprietary trading. Now, proprietary trading is basically bets that only benefit the bank itself rather than the clients. So that's also a very important thing to remember as we continue to go through here. That rule banned that, and now they're trying to roll it back. They delayed it successfully, but we'll see what they're going to do as time goes on. So now banks get more time to divest from private equity firms and hedge funds and specialty securities projects. But here's the important part. Quote, "The central bank also said it plans to extend the deadline by another 12 months next year, which would give Wall Street a 2-year reprieve through the 2016 presidential election." So let's pause. They frame it like, well, we're going to give them an extra year, 1 year. And then they go on to explain, and by that I mean after this 1 year of a break we give them from the rule, then we're going to give them another year. Well, then what's to stop you from continuing to do this? You already told me it's going to be 1 year and then already upped it to 2 years. So how do I know that you're not going to give it another 2 years and then another 25 years? It appears as if they're just playing around with us here. But here's the killer line. Quote, "A move that gives financial lobbyists more time to kill the new regulation before it goes into effect." Oh, I see what they're doing. They delay it, and then they delay it again, and they chip away at it every single time, and then eventually they just get rid of it. And they do it when nobody's looking, and it'll be, in the year 2017 on a Friday afternoon when everybody's getting out of work and nobody sees this part of the news cycle, and they bury it, on page 13 on a popular website or in a newspaper. Welcome to the American economy. So in reality, this rule, which was a good rule, number one, was already watered down. I didn't even bring that up, how the way they ended up implementing it was already a joke. In fact, I remember doing the story originally where we went through it, how the original Volcker Rule was just like a few pages. And by the time these guys were done with it, it was a couple hundred pages. How do you change a rule that's like 1 or 2 pages into a couple hundred pages? This is how you do it. You put the rule first, and then the next couple hundred pages all explain how that rule doesn't apply, and what they really mean is the exact opposite. You put the regulation and the deregulation within the same bill, so the bill negates itself. And this way, politicians get to go out there and act like they actually did something by saying, we passed the Volcker Rule, but in effect, you didn't. You're saying you did, and you actually got rid of it in the same bill. So number one, it was already watered down. Number two, it was delayed 2 more years like we just went through. And number three, they say now in the next 2 years, they're going to work to completely eliminate it. So thank you very much. It was nice while it lasted, but the Volcker Rule is dead. So if you're keeping track, they're invalidating all of the financial reform that we did after the subprime mortgage crisis, one provision at a time. Now, Dodd-Frank was already weak. It was already watered down and full of loopholes. But they're taking what little they did, and piece by piece, they're dismantling it. I mean, we went over it just last week, how they got rid of the provision that said no more taxpayer bailouts for derivatives. They said, okay, if you want to do these risky casino capitalist bets that you're probably going to eventually lose on, well, that's fine, you can do that, but if you lose, it's on you. Well, now they got rid of that, and that, in essence, says that investment banks and all these risky financial institutions, they can bet on whatever the hell they want to bet on. It could be as risky as you could ever imagine, and if they go belly up, we rush in and save them. So think about what incentive you just set up. They don't even have an incentive to do good from the beginning anymore, because if they fuck up, we're there to help them out. So no matter what, we get screwed. They privatize the profits and they socialize the losses. If they make money, they keep it. If they lose money, we save them. That's the way this works. And then when the next crash comes, which is inevitable, they'll all turn around and say, well, who could have saw this coming? Right here. Right here. And it's not just me. I don't want to toot my own horn here because this has nothing to do with me. It has to do with the fact that the news stories speak for themselves, and the news stories are saying very clearly that you're dismantling the few protections that were put in there to prevent the next subprime mortgage crisis or just the next economic crash in general, whether it's a recession or a depression, and whether it's brought about through derivatives or another housing bubble or a student loan crisis or what have you. So there you have it, man. And the worst part of it all is when the next crash comes, I'll bet you anything, that the establishment consensus is not, hey, we didn't do enough regulation and we should have done better regulation and we should have looked into the situation and acted efficiently. No, the consensus is going to be, well, I guess Dodd-Frank caused the crash because they implemented Dodd-Frank and then there was a crash X amount of years later. So the answer's got to be total deregulation. And they'll use that to deregulate even more. So they'll take away the exact wrong conclusion because nobody's going to pay attention to stuff like this and remember these details and remember that when the next crash occurs, it's going to be because we didn't learn the lessons of the last crash and we didn't regulate the right way.